This is your daily TA wrap. When we take a look at these markets, we do it from a neoclassical perspective. Every time asking ourselves what happened today and what does it tell us about the coming ones. I do the show 4 times a week, Monday through Thursday, live here at 9 o'clock Eastern Time from the base of the Rocky Mountains. Folks, we had an interesting day today. You know, sometimes these things just kind of like pop up out of nowhere. Last night, or actually this morning in Europe, you had the markets catch wind of a blow up at one of the, actually I think the second largest bank in Portugal. And that blow up had our markets down heavy prior to the open. It got worse and worse until they stopped trading the stock of that bank in Portugal. Evidently they couldn't make a payment. Their bonds went to pennies, and all of a sudden it's a crisis situation again, like we see so many times. S&Ps were down 20 points at one point before the market opened. The NASDAQ itself was down 50, or actually the NDX was down 50. And then, this market does what it always does. Opens at the lows and rallies straight back up. And if you looked at it intraday, that's exactly what it did. I mean, it was straight up off the bottom. You got a little bit of selling at the end of the day, but for a day where you had the collapse of a major bank in Portugal, markets just shrug it off, and it's done it so many times. Now, the one place they're not shrugging it off so easily is in the Russell, and we've been looking to the Russell for a long time here in terms of our tells, and that Russell, I don't think we should look away from that. So the Russell down 1%, stays down 1%. It was down more than 2%, I think, at the open. See, 1151. Well, actually, it wasn't. It only rallied 10 points up, so it was down 1.5% or so. But pretty big hit there. Elsewhere, NDX climbed right back up. S&P's only down 0.41. For a day where everything looked like old times, so to speak, in Europe, these markets just don't give a flip. Gold up, actually was up more, closes up 128.54, up 0.7, is up over 1% early, pretty much across the board outside of the equity markets. And of course, the DBA, which is the grains have been getting killed ever since the USDA reported they were going to have a bumper crop. Everything else up. Bonds didn't close that much higher, but they were up as well. Oil that finally got a little bounce after 5 or 6 days of beating, and the dollar finished stronger, euro weaker. So if we go and take a look here at the charts, what you're going to notice here is the S&P comes down again. That low today, 1952, what does that do? That gets into these two big bars again, right? We got this one here and that one there. So the top of this one in this price zone here, the top of the other one in this price zone, and if you take the bottoms of them, they're in that price zone, and guess what? It goes down, tests right to the bottom. That's exactly where it tested to. Price zone on that high volume low is 1952.18. Guess where we get? 1952.86. You come right up to the doorstep, and then the buyers show up as usual. Dipsters go to work. They drive this thing back up, and they drive it back over the highs of both of those bars, and it had less volume, and it actually had less volume than the 7-8 bar on the way down as well. All of that hammer reversal. What does that tell you? It tells you this stupid thing's going to go back up again and try to test higher. So that's the S&Ps. Now that's the strongest of the group. If we go to the next strongest, which is the NDX, you had basically the same behavior. You come down into the big bar. Top of that one's 38.44. You get into it, 38.37. A lot less volume. You close back over it. You also get under the 7-8 bar, which had a decent volume off the top. And what does that do? Well, closes back over that as well. Looks exactly like the S&Ps. So both of those, when you look at them, they actually look bullish as of tonight, and that's with the mess in Europe. IXIC, the NASDAQ composite, same sort of scenario, same sort of setup, same result. So that's the three strongest ones. If we go over to the Russell, which is the weakest, the Russell doesn't have a chance. Transitions trend, it's going to transition trend tomorrow, going to sideways, has more volume. So you break underneath the swing point low, you have more volume. Now you're down here testing the other swing point low. That was at 1154. You test into it, 1151. You had more volume. Russell says, forget it, we're going back down again. So the Russell says we're not done. And so that's a very different picture than what you're seeing from the other indexes. Which one do I believe? Well, it's hard for me to say this, but the Russell has been giving me the better signals. Now, that doesn't mean tomorrow we're going to crash and burn, but that does tell me that we're not out of the woods and that we're going to see some more pressure before this is all over. So that's the scenario there. Dow Jones, actually Dow was like the S&P 500, except for it didn't get back over its swing point, or actually that high volume bar. So indexes, if you count them up and add them up, there's more bullish than there is bearish here. How long will that last? I'm not sure. I want to show you, before I skip over to the sectors though, I want to show you a couple other things. And so I'm going to bring over the weekly here, and this is on the Russell. And the reason for this is, if you take a look at this, now, you know, we're only one day away from the end of the week. And the volumes, you know, it's going to come in a little bit higher than it has been. If you take and look at the range that has been in place here, and actually if you draw it farther out, because it actually is all the way from back here. So this range has been in place ever since we broke up higher on this thrust back October of last year. So from October of last year until July of this year on the Russell, we've essentially been in a range. And inside that range, there's really two ranges. And if you draw those in, you're going to see roughly right in there is one, and roughly right underneath it is the other one. And where are we? Well, we're coming right down to visit that price point, you know, that kind of separates these two groups, or these two ranges. And so from that perspective, the Russell's kind of at a crossroads again. You know, is it going to trade back down and come back down here and test these lows again? And remember, now we got 3 of them down here. This is on the weekly, folks. Matter of fact, you got 4. Or is it going to hold up, bounce back up, go back up the other way? The more bearish scenario is that this thing hangs up here for a while and then comes back down, and then hangs down here for a while, and then eventually breaks it all. Right? That's the most bearish scenario you could draw up. Because, why? Because anybody that's bought since October, if this were to break, anybody has bought since then, and if it takes it another, you know, month and a half to break, that would be almost a year of trading that would all of a sudden be underwater. And a break of that many swing points would lead to a very fast break to the downside. That's the danger of this type of scenario, where one just sees the market consolidate and gyrate sideways. Now, anytime you see this pattern, and most people don't draw up the multiple swing points and all that business like we do, but anytime you see this pattern, you know, it's either consolidation before you go higher, or it's distribution, right, where the larger operators are getting out of what they're in and turning around and selling it to somebody else, right, lightening up their load before this thing drops. So distribution, consolidation, that's a question mark. We don't know which one it is yet. But you have to look forward and say, okay, what could happen? What could happen? If it breaks underneath this and starts playing with this lower range, all of a sudden it becomes a lot more dangerous again. That's the Russell. That's the scenario and the setup there. I want to look at one other thing while we're here, and that is if I look at the NDX, I want to go back to this chart. It looks to me like the NDX is actually going to have a little volume expansion off that high. It never 39.23. Actually, it's going to have been over and back under it. So, you know, last week was a light week. What did we trade? 3.5 days last week, right? Because we had Wednesday half day. What is that volume? 79.8. Boy, I'd have to do some math on that one. Hang on a second. Let me do this because I'm curious now. So if I do the math, what do we got here? So 79, let's just call it 80. And that's, if we take half days, you usually have 10, so we had 7, right? So divide that by 7, and then multiply that by 10. That would give us the full volume for the week. That'd be 114. And we have, oh, we're not even close. We have 73. So we're going to have gone over, back under, and we're going to have lighter volume. And that's after an extended move. So that may be some sort of a tell on the weekly time frame. And while we're here, let's just quickly glance at the others and see what they look like on a weekly time frame. So the Dow, 17074, the Dow didn't get over the top. The S&Ps, 85, 84, they didn't get over the top. And they're all going to have the same sort of scenario, it looks like. So the NASDAQ, the NDX itself, is the only one that's in that condition, it looks like. The rest of them didn't get back up there. And let me see what the Russell did. So the Russell came off. All right, so what does the Russell got? 1.384. 1384, and that's divided by 7, and that's times 10. 1977, and this one's going to come off, but it's not going to have volume. Another thing to note on the Russell, and this is another reason I'm concerned, is, you know, I don't practice the old school classical TA anymore. But folks, that is, in classical terms, if you look at McGee and Edwards, you know, kind of the Bible of classical TA, that is a double top. They talk about double tops, unlike most people. Double tops to them, when they wrote that book, was you need about 3 or 4 months in between the two tops, and you definitely have that here, right? There's enough time in between them. You test the top. You test the top on lighter volume, right? That's a classical setup failure. The top's 12.12, you did 1.7, you did 1.3, and you got over the top and back under it. That's a failure, folks. So, you know, yeah, we can bounce from here, but hey, it's late in the innings on this game, and I think that's going to be a problem as we go forward. Okay, let's look at the sectors, because the sectors, you know, we had big reversals today across pretty much everything. We just saw that the Russell has actually broken down now, right? So it's got a trend transition, and we're no longer bullish. You know, we're going to sideways tomorrow. If you look at the sectors, you actually have a swing point low test here on the XLE with volume expanding, right? That's testing into that low. It doesn't look like it's quite enough to break it yet, but it's close. And then the other one actually broke today, which is the XLI. This breaks another swing point low. That low was 53.78. You close at 53.76. You have higher volume. That's a break. If this thing comes back in, does the full retest, or does a retest regen on the upside, it is possible because of other sectors, you know, and then regenerates lower, you know, look out, because then you're starting to get back into the place where everything was a real problem before. Those price points back at about 52.5. Yeah, they'd have to go deeper, but still, this is the first one to transition to sideways. Now it transitioned to bearish today. XLE is pretty close. XLF did a retest, regen, failed. Even though it came off that low, didn't break it today, it tested into it, and it tested into it with what? Slightly lighter volume, but it was coming into it pretty decent. So that says it can test again. And then if you look over at the, there was one other one. Oh, the XLY. The XLY is doing a full retest regen, doing 4.8 into 2.5. That looks like it's going to test some more as well, and that one's trying to break back down. Now on the flip side, there are others that are still bullish. If you look at the XLK, this thing's still bullish. It did just like the NDX, wants to probably bounce up here. The SOX still looks bullish. The IYT still looks bullish. So there's enough here to hold this thing up still, but at the same time, again, we're starting to see more and more signals that there's some potential problems, and that's in the domestic market. Now, flip over and look at the world market. Remember last night we were talking about, and as you know, Europe got hammered today. Last night we were talking about Europe should bounce. Well, that's not what we got. You know, when you get a hammer reversal, you almost fulfill your extension, right? You would expect a bounce off of that, and it was anything but a bounce. It was a bloodbath. Not huge volume, but volume comes out of it. You break two swing point lows here, and I failed to notice this on the weekly. It actually broke on the weekly as well. So you got breaks on multiple time frames in the CACs, right? French market is not a strong market, and the economy, as I've talked about for months and months now, is a mess. So you get breaks, right? The whole problem with Europe, and you're seeing it in Portugal again today, is that, I mean, there's a debt problem around the world, but in Europe, the countries themselves can't, you know, they're homogenous in that, you know, one fits all. And just as you see here in the CACs up there making new highs after new highs, right? And these are like multi-year highs when the economy is stuck in a rut, if not worse. Why is that? Well, because it's treated as if it's homogenous with like Germany, and it's far from it. You know, it's just hard, both from bonds, from the stock markets, it's hard to treat these countries inside the Euro zone differently, and it's hard for these markets to price them properly, and you get these allocations that are just out of whack. So anyway, this one finishes off the ABCD structure today. It has broken on multiple time frames. It should bounce. When it bounces, it's more than likely going to fail. Move to the DAX. The DAX being the strongest, both economically and in terms of the market. The swing point high, it was doing the retest regen. The swing point high low was 96.3157. You get underneath it, and you close back over it. You have lighter volume. That also says this thing should try to bounce tomorrow. Just like the, well, actually it's not quite the same. This almost made it back to the highs. Now at 5 days it sells straight down, closes back all the way back to, you're back to May time period here. And if you pull it back and look at it on a monthly, I mean, you're all the way back into the first of the year, right? Just like we drew on the Russell a while ago, you know, there's a range up here, there's a range up underneath it, right? And then there's a third one down below it. This one's in the second one now. It's fell out of this range. It's no longer in the top, right? So now the test on the way back up is the high of that swing point on the weekly. And you can see it's the lows of all those lows that we just broke out of. So if you come back over to the daily, that test on the way back up is going to be this area. And it's going to be, how does it deal with this area as it comes back into it? Right here, that's partly because of what it broke, right? Because now it's going to do retest regens off these lows. It just broke 3 of them. It hasn't broken on a weekly, but you broke 3 of them here. Well, you broke those previously. You broke this one now. You're going to get a bounce up. You'll do a retest regen off of that. So when I clean this up and draw it one more time, the key area on the way back up is going to be right there, and that's what's going to be hard to get back over. So that's Germany. That's the state that it's in. And the FTSE actually sold down again today. And the FTSE, this thing's been all over the map. Remember, you were getting lower highs, lower lows. And then this thing had an ABCD structure to the downside. Then it goes all the way back up, breaks a high, which put it into a range trade, right? Some sort of a range trade as a result. And now comes all the way back down and breaks another low. So you can see the wild kind of, we don't know how to value this. This is a big range. It just got expanded today. You're back up underneath here testing this low. You had volume. You'll be back down here. So just like Germany, it's going to come back up, do a retest regen off of this, and that's going to be the key area on the way back up, just like Germany. Same scenario. Elsewhere, foreign markets still look pretty good. You know, overseas markets, for the most part, still look pretty good. The Hang Seng, the Hong Kong, all those guys still doing pretty good. They're all hanging up there. The Hong Kong still is doing its retest regen, still holding. The HSCI hasn't got up there, but you know, the Chinese market's still looking pretty good. Nikkei hasn't really came off yet, and the Taipei market actually made new highs. So it's not as if, you know, it's homogenous in that everything's falling, and it's not true. Asia probably will take a little bit of a heat tonight, but for the most part, they're probably going to hold up. Then we're going to see if Europe bounces in the morning to support another bounce here. But folks, as I said earlier, I don't think this thing's over. Let's look at the ox markets. Gold and silver popped up. They had ugly candles at the end of the day, but they did get over those highs. They break over them. That's another ABCD structure to the upside. And on the weekly, yeah, on the weekly it's pressing up. So it's looking pretty good. Silver's stronger, I believe. Let's look at it. And it does the same sort of scenario. You open at the highs, but you still close with a gap underneath, and that one looks pretty strong here. Bonds press up and then sell off just like gold, but you actually had higher volume as you went into that high. That's probably going to go right back up there. Well, actually, here's a big test over here, 1368. Didn't quite get to it, so it will probably get back up there and test it again. We talked about nat gas last night. It sold off again today. That needs to consolidate at those lows and test some more. Dollar was up a bit. Not a big day in the dollar, but still a bounce. The dollar, if it's going to get going, it's got to get back up above this 21.45. If it can do that, it can go right back up to the top. Let's look at the FXE. And that one's still hanging. And then finally the EEM, which is the emerging markets, and that one's still hanging in a range at the top. So, you know, for the most part, Asia looks pretty good. Europe took a beating as a result of Portugal. Our market's down heavy. Dipsters walk in, make their money. Looks like it's, you know, the same sort of thing you always get, and that is that no matter what happens, this market goes back up. But I think you'd be a little bit naive if you're to think this market is not going to blink some more. It's going to blink some more, folks. It's not over. Let me see if there's any questions tonight, and if so, I'll try to answer them. You can text me 303-912-9110. Here's the numbers, support at tatoday.com, or of course you can type it in. I had a couple questions emailed to me. Let me try to take those first, and then I'll move to anybody else that I have time for. So let me see. First question was, where did they go? Bear with me. Let me find it. I'm in the wrong folder. Here we go. BBRY. So BlackBerry. So the question is, let me get these typed in so I can see the charts. Question is it looks like it's breaking out, or actually it says, could you look at BBRY? It's breaking above the daily swing points and has a 30% short float. Would I buy it here? Let's take a look at it. So BBRY. So what do we got here? Man, that's just pressing, and that's because of the big short interest. I mean, they're not letting them out, right? They're just squeezing them higher. So you get over a swing point high, and that's 174. You're doing 120. 120. You're going to do about 25. What is 120 divided by 4? That is 30. So 120, that's going to be about 150. So you're going to have lighter volume. So it's going to be a suspect breakout. You know, I mean, you've gone, in 4 weeks, you've gone $4. Not quite, but, you know, almost $4. Actually, $4. Do I want to buy at this price point $4 higher? 45. That's like 55 cents, 55% higher. You know, I can't buy this because I don't know where to put my stops. I mean, I'd have to put my stops probably back underneath here. The only way you can trade something like this, folks, in my opinion, you know, unless you're willing to take a larger drawdown, is you just get up in the morning when it retraces in the morning, you buy it in intraday and you sell it by the end of the day. Unless you get a nice big cushion, because, you know, you could wake up any day and get hammered. And I realize there's a huge short interest, and that's what's pressing this thing. But I can't buy something that's up 45% in 3 weeks. I just can't buy it. So no, I wouldn't buy it here. I'd simply wait. Because I guarantee you, if I buy it, I'm gonna end up in the hole, and then I'm gonna have to average down, and then if it goes down farther, then I'm like screwed. So I just don't buy them. I just resist it. DRL is the other one. Let me see what this one is. This is coming back into support with little volume. Yeah, but this thing is like in a mess on a longer term basis, right? I guess we've looked at this before. So you had a spike up, but I think we decided that spike up, and maybe I'm thinking about a different chart. Yeah, this one's not bad. I would probably, I don't know what's driving this news. So you test back in. That low was 951. So you test back into the high with a lot more volume. You know, this thing can make it back to, you know, it can make it back to probably 11, which is this high. 9, actually above that, probably that swing point high. Yeah, I mean, this one I wouldn't, you know, the only thing that's a gotcha right now is the whole market wants to sell down. And so do I want to buy a stock that's been really beaten up when the whole market wants to be weak? I just believe the market's going to be weak. So, you know, that's my only thing. Classical TA, this is a buy as it fades back in. Your stop's going to have to be underneath the support zone. ATR, you know, 25% of the ATR underneath the support zone. So you've got to measure it up as it comes back. I mean, right now, that's still $1.50 away on a $5 stock, so we're talking about a large percentage. I would simply let it try to get as close as possible to this low, 411. And this high, which is 447. So I'd at least wait another 50 cents. That's 10%. And that's where I'd probably look at it. Just let it fade in. Okay, let me see if there's any more questions. What do I think about FCX? I'm out of time here, so let me see what this one is. You know, this is like the rest of them. If you're not in it already, you just gotta wait. You see what the weekly looks like. Yeah, you gotta break out over multiple swing points on the weekly. You know, this thing's not gonna come in much, but you gotta try to catch it on some sort of a drift back in. Somewhere around 38 on this one is probably a good spot. And KMI has earnings on July 16th. Facebook has earnings in 2 weeks. Yeah, so this is this broker dealer? I don't know. I think it is. Yeah, you know, I don't buy into earnings. This is a buy, but I don't buy into earnings. If anything, you take a small dip of it and then you see what happens to it. But I typically don't buy into earnings, and I definitely wouldn't buy into it in this particular case. You've already extended your ABCD structures, right? It's overextended. You're going to have to let it pull back. Probably pulls back on earnings. All right, I got to run, folks. Thanks a lot. Have a great tomorrow. I'll catch up with you on the weekend show Sunday night.